Welcome back. We have some big movers in the media space today, most specifically Roku, up 31% after better than expected revenue and guidance. Even Disney up more than 2% after announcing they'll buy the rest of Hulu from Comcast. Warner Brothers Discovery up 8.5%, despite finding itself in the middle of some criticism. Julia Borston here to break it all down for us. I'm curious about this criticism, Julia, but let's start with Roku. That's the biggest mover.
Huge mover here. I'm talking about a 30% jump in the stock after the company reported better than expected results after the bell yesterday. But the key thing here, Kelly, is the fact that Roku not only beat expectations in Q3, but guided to continuing and ongoing advertising revenue growth in the fourth quarter. I'm just going to read you the key quote here that I believe is driving all of these media companies higher. They said, "We had a solid rebound in video ads in the third quarter. And we expect the year-over-year growth rate of video ads in the fourth quarter to be similar." This idea that the concern that we've seen for the social media stocks that perhaps the conflict in the Middle East would be causing a pause in brand spending, that's just not happening when it comes to the TV ad market. And it does indicate that the overall ad economy is continuing to strengthen. So really key piece of that here.
All right. Interesting. Next up, we've got Disney buying up our parent company Comcast share of Hulu. That's not a surprise, but this is sort of a weird process where they're in the next 4 weeks going to deliver that first, $8 billion, and then they're going to argue over whether they owe more. What incentive is there for Bob Iger to say, yeah, we'll give you a couple billion more? I mean, this is going to end up in arbitration, right?
They're contractually obligated to. I would say think about this $8.6 billion that Disney is paying Comcast. It's like a down payment. They made a deal years ago that set the sort of the base price that this asset would be worth. $27.5 billion is the base price for what they would pay for Hulu. So this is Disney paying their percentage of that base price. Now, they did agree to have their lawyers and their bankers figure out how much of a premium to that base price they were going to have to pay. So the bankers and the lawyers are working on that right now, and there is an expectation that there will be some sort of premium paid. So
why?
Rich Greenfield, because that was the deal they arranged and the deal they came to.
Valuations were so high back then. I mean, isn't Bob Iger going to say, well, times are dipped. Look at what's happened to media stock. Look what's happened to our stock.
John, valuations were high then, but you have to look at the fact that Hulu has grown so dramatically since then, specifically when it comes to the user count. Now, Rich Greenfield, who watches this space very closely, he is saying that $35 billion seems like a fair starting point for these negotiations. So there is a consensus that there would be some sort of premium paid. The question is just how much. Now, the other thing that's really complicated here when you're coming to valuing an asset like Hulu is we've never seen a huge streamer like this ever be sold outright before. And you also have to consider how much Hulu's value is tied into the fact that it's part of this sort of bundle that Disney has put together with ESPN Plus and Disney Plus as well. But we're looking at some of these analysts saying that sort of look in the $35 billion range. And look, the fact that all of these streamers have reported so much growth in the quarter. We just had Netflix beat expectations by a lot. Now there's some optimism coming out of Roku. That may impact how much this asset is valued at as well.
Yeah, I mean, I guess the only thing they could do to get more leverage would be to say we're not going to buy it, but that's a whole other story. Let's move on.
That ship has sailed. They already said they're going to buy it. That's what today's the news yesterday about the down payment was about.
Exactly. Julia, let's move on to this final story, which is something I've kind of always wanted to do. A wild story out of HBO. New reports emerging that the former president of original programming ordered the creation of fake social media accounts to troll negative critics. What do we make of this?
Well, he acknowledged it today. He was doing this is Casey Bloys. He was doing a presentation today. He said in the midst of the darkest point of the pandemic, he was spending too much time on Twitter. And he said it was just a handful of tweets that he had gotten one employee to send to critics, and this is not a widespread thing. But he said it was a dumb mistake and sort of in the depths of pandemic.
Did he just offer this up
on Twitter?
Did people know and call him out on it, or did he just randomly interrupt this presentation?
So this was all reported by Rolling Stone. And it was first reported by Rolling Stone, and then this sort of prompted him to acknowledge it in an event today that was previously scheduled to go through some of the highlights of HBO's programming coming next year. But the idea of a fake Twitter account to troll or to respond to critics who were maybe criticizing HBO. It's a lot of media noise, but ultimately really does not impact
you don't
these
think
Warner
he'd lose
Discovery
his job
shares
or anything like that for involving
No. I mean, the fact that he acknowledged it today makes me think that this is this sort of water under the bridge. But I just want to point out these shares that are up 8% ahead of Warner Brothers Discovery reporting next week. And I do think a lot of that is on the momentum from Roku. But the fact that Casey Bloys acknowledged it today, he said it was a dumb mistake, I think means that he's ready to move on from it and get to those results that are coming next week.
He might be ready to move on. I think the employee who they made tweet that stuff is suing. And that's part of the reason why it came out.
That is how this all came out. So so the employee, so an employee sued, saying that this employee had been pushed by Casey Bloys to send these tweets, but then Rolling Stone picked up on this lawsuit, which is how we get to this story today.
Maybe we haven't heard the end of this. I don't know, but for our audience right now online, the ad spend coming back is probably the biggest thing. Julia, thank you. We appreciate it. Our Julia Borston.